and the other big story is about RBI tightening the screws on unsecured consumer retail lending. So let's turn our attention now to the consumer durable space. Now, the Reserve Bank of India last week tightened the loan provisioning norms for banks and NBFCs to check the rapid surge in unsecured retail loans and has raised the risk weightage from 100 to 125%. To discuss the impact on the consumer durable space, we're now joined by Nilesh Gupta, Director at Vijay Sales, and Praveen Sahay, Research Analyst at Prabhudas Lilladher. Gentlemen, thank you very much for joining in. Nilesh, first question to you, just to lay out the context. What percentage of your sales come in via this EMI scheme or the unsecured, retail lending that the RBI wants to clamp down on? That's one. And two, have you seen a pickup in defaults?
Nilesh,
you're on mute.
Yeah. Good morning, everybody. Basically, our overall EMIs, sales on EMIs, approximately 80%, out of which 40% is coming from paper finance. And let me just clarify, the RBI has not clamped completely on paper finance. They have clamped restriction as of now, till the time the finance companies give them clarity on how they are going to give the data to the consumers. Only on the online piece of paper financing, and also on certain EMI card acquiring new cards. But whatever paper financing is happening at the store, that still continues. So the question where the RBI has clamped restrictions right now, I think that is contributing not more than 5 to 6%.
Sorry, just just to understand, the sales which happen via EMI is 80%, but 40% is paper financing. What exactly is this paper financing?
So paper financing is all, so on EMI, 80% is the EMI sales, and out of 80%, 50% is on paper financing, and that's why overall sale was 40%. Paper financing is one on non-banking finance companies where a consumer walks in, gives his Aadhaar card, gives his salary slip or other related documents, and then the finance is approved. And the other 50% which happens is on EMI through credit cards.
Okay.
Credit card EMI is the other 50%. Got it. Thanks for that explanation. Praveen Sahay is also with us. He tracks the sector at Prabhudas Lilladher. Praveen, this crackdown on unsecured lending, right? I think the overarching theme is that it could impact consumption and demand, perhaps. Tell me, what is your understanding of the situation? And amidst the companies that you track in your coverage universe, which ones are the one that could get impacted?
Yeah, hi, good morning. So definitely this the risk weight changes could impact consumer sentiment, but I'm not seeing this is going to impact severely on the demand volume the way forward, because we are going just back to the pre-COVID norm, especially for the NBFCs, and also the lowest coverage of the penetration coverage for such kind of products. And also this interest rate, in terms of the increase in the interest rate, I don't see there would be any impact on the volume. Only thing is, if the accessibility of such kind of lending will get a curve, so that may impact the volume. But having said that, I'm not seeing with these change in the norms, the severe impact on the, especially on the volumes for the white goods. Maybe expensive products to some extent will get impact. And also to say that around 35-40% is sales happen through the consumer financing across our coverage universe. So that may get impacted. And as far as our coverage universe say, definitely we are still, view of a positive view on the wire and cable companies, which are doing good and expected to do well the way forward as well, because of the end user industry is doing very well. For B2C companies, if you look at like a Voltas or a Blue Star or Whirlpool, definitely this festive or this season has given some kind of a uptick. In the last 15 days of a Diwali has done well. So there, we are also expecting a quite some amount of a positivity. Having said that, that's in the entire coverage is still our liking towards the wire and cable companies to continue. In that, the RR cable is one of the top pick for us.
All right. Hi, Praveen, and good to see you. And thanks so much. We appreciate you joining in and giving us your view on a couple of stocks. But I'll come back to you. We want to understand which are your top picks. Nilesh, I'm just coming back to you. You explained that to us. 80% is EMI, 40% a piece between credit card as well as paper finance. But you said the total impact, on the RBI, the recent directive that could have on your business only 5-6%. How did you come to that number?
So basically what the RBI has said is whatever digital transaction, loan on digital transaction, the finance non-NBFCs are doing, they are not possibly getting a proper trail of consumer knowing how the interest would be charged or how the payment would happen. So they want that process to be corrected. Once I think that is corrected and the NBFC companies gives the details of the same to the RBI and they are satisfied, they'll remove this restriction also. But ultimately what happens is out of the total paper finance, what happens, 90-95% of the paper finance happens when the consumer walks in. And when he walks in, he's giving in his data and he fills up a forms and then the financing is approved. So there is no restriction on that part of the business, which is our 90-95% of the business through financing.
Amongst the various consumer segments, Nilesh, like ACs, TVs and other categories, which are the ones where we see an increased prevalence of consumers opting for, this EMI, which has been now, in a way restricted by the RBI? That's question one. And again, going back to my earlier question, have we started to see increasing defaults, which has prompted this RBI action?
So I think there is, in fact, across the categories, whether it is mobiles, whether it is refrigerators, televisions, everybody wants to take on finance. Now, as far as the consumer is concerned, he's not bothered about the process which the company, finance company follows. What he needs is, I want to buy this product and what is the EMI and when can I take it home? And that process will follow. So that will not be an issue at all for the consumer as far as end consumer is concerned. As far as defaults are concerned, although I think I would not be the right person to give you a correct assessment of that, but whatever little I speak with the finance companies and when I ask them, they say that their process and the way they evaluate before giving the finance is so robust. Now defaults are very less. And secondly, with most of the consumers now, especially in the metros and all, the consumers are aware of the ratings which go down if they are not going to pay. And if that happens, they are not going to get finance in the future. So the default rates are actually going down. So I think that's not a cause of concern anymore.
Okay. So that's good to hear that default rates are going down.
Yeah, most of the consumers are aware of the CIBIL ratings.
Okay. I just had one follow-up. Since we are assuming that the risk weight change could impact consumer sentiment, I want to understand from you, and this is the point that Praveen was making earlier, that volumes of white goods have not been hit yet, but perhaps it could be in the months to come. Is that your view as well? Could this have any major impact on the volumes of white goods?
I don't see any major impact at all in the volumes of this. And most probably, I feel very soon the restrictions also would be removed by the RBI once the finance companies go back to them and give them the new way of handling the data.
Nilesh, I just wanted to ask you, you're talking, I think, about the Bajaj Finance specific issue, right?
Right.
You're right. But on Friday itself, the RBI has tightened the screws on all sorts of unsecured lending, which in turn could have an impact on that entire 80% of your sales. Me for one as a consumer, when I come to your store, I buy things, but I buy it on an EMI because I'm getting a better deal, not because I need it. So according to you, since this entire 80%, the tightening of screws will be on the entire 80%. In that context, do you see the impact? The Bajaj issue, we got it sorted out. That could be only 5-6%. That you've explained it to us. But we're talking about the larger, RBI directive that came on Thursday evening, which impacted the banks and financial space from the stock market perspective on Friday. How does it impact your sales? Do you think it'll be a hit? Because the entire 80% will fall under this particular, changes.
So correct me if I'm wrong, the RBI directive is on the margin money to be held up by the finance companies for every loan they give.
No, Yeah, so the RBI directive basically is looking at unsecured loans that have been given out, and because of that, the growth could be impacted in the sector, and the second factor could be the cost of funding as well could go up, which in turn will impact your end customer. So in that perspective, the EMI sales could get impacted. That's what we're trying to get at, sir.
So with the cost of funding going up, I don't see that will impact us, for the simple reason is, at the end consumer is not paying anything. It's basically absorbed by the retailer as well as the manufacturer, normally in the ratio of 80-20%. So if the cost of funding goes up, the cost will go up more for us rather than the consumers. And hence consumer will not be affected. And see, the fact is now in today's time, the only reason why our sector is doing well and growing year on year is only because of the EMIs. If we take away the EMIs, the sector will actually possibly go in a tailspin drop, and we may see a degrowth over the next few months if that happens. So I don't see a challenge over there if it's only the question of the price going up. And as far as the margin money for the finance companies to keep more, I think they have sufficient funds where they will be able to manage that, because it's a very important sector. And secondly, we also have to understand the consumer, the finance companies through consumer durables also are able to get these same very customers to whom they can sell a home loan, a personal loan, or any other loan later on. So I think our segment is very important, where I think they would not want to lose out on anything.
Okay.
All right, gentlemen, we have run out of time, but thank you so much for joining us and explaining this, this crackdown on unsecured lending and what it means for the consumption sector. Thanks to both of you, Praveen as well as Nilesh.